Good morning, everybody. I'm Ed Parcaut here with Mike Kelly, Real Estate Jerky Daily. Good morning, Mike. How you doing?
I'm doing good. How are you?
Good. I got a good night's sleep last night.
What?
Yeah.
That's crazy.
I mean, I was doing the 3 days virtual at 5:30 to 3:30, then doing work and everything else is a lot. You know, your conferences, going there and doing that puts a stress on you, but that was just a lot for me those 3 days. It took a toll on me by yesterday.
A toll.
Yes, I had to pay $1 million. Excuse me.
$1 million?
Yeah. All right. Why don't you do your numbers first, because I got other stuff to talk about.
I got lots of stuff. So look at that. This is week ending December 20th. I don't know why it's not the week ending the end of the month, but maybe
why
they
you got old
collect
numbers. These are wrong numbers, dude.
These are what CAR has up right now.
Well,
so
I think sure that is because there's been time where you say that, and then you find them.
Nope. I did exactly what I should.
And this should be end of the year numbers.
Exactly, it should be, but it's not.
We talked these numbers before.
Yep. So
I don't want to talk about. Bye.
Yep. I'll take care of that. Watch this. Boom.
So just say we don't have NAR numbers yet.
We don't. I didn't look at the week ending. I just assumed it would be. But we talked about absorption rate yesterday, and real quick, we began the year with an average days on the market of 36 and an average cumulative days on the market. That means it was in escrow for a while, then came back on the market or was relisted with somebody else of 44. And we ended the year with average days on the market of 55 days on the market and cumulative days of 63.
All right, so break it down for me, because I don't see numbers.
You won't see numbers.
No, I'm just saying I don't see them, and no one else can see them. So explain them real quick. What's the difference?
The difference is it's taking longer to sell a piece of property
in Stanislaus County.
Stanislaus County, it's taken a lot longer.
So the absorption rate of properties on the market is taking a lot longer than normal.
See, I don't think you're going to be able to see those because they're so darn small. And it get any bigger, it goes completely off the page.
Yeah, and that's fine. Just so so on average, how many days right now is it taking? Just say that.
55.
Okay.
And if you started off listed incorrectly, meaning too high, and you waited so long, and you relist with somebody else, and or you reduce the price to get sold, or you were in escrow for a day or two, and then boom, it goes back on the market. Mm-hmm. Those days are 63. So of course it would be a little bit longer because you oopsie doopsied.
Oops! What the heck is oopsie doopsies?
Yeah, you made a mistake.
Oh, okay. I'm sorry.
Waited too long.
That's the old adage.
Yes. Well, I'm old.
All right. So what do I have today?
I don't know. You should have jolts, right?
Well, we do have jolts, but it's weird because where'd it go? Right now, so the 10-year was as high as 420 today.
Okay.
And all this, it's 420. Now it's at 417. But the rates improved by 28 basis points right now, but they were as good. They were as up as from yesterday to today after some things happened yesterday, almost 40 basis points better in rates. And the question would be, how can that be if the 10-year sitting at 417 and didn't do anything?
That is interesting.
Well, I can tell you, Dow's up 199 points right
I just
now.
Looked.
S&P, I have no idea. But what happened yesterday
33.
is... Can I talk?
Yeah, you
All
can.
right. So one of the things that happened yesterday is President Trump has directed Fannie Mae and Freddie Mac to purchase $200 billion in mortgage-backed securities.
Wow.
This aggressive move is aimed at pushing mortgage rates lower. If this is executed at a pace of $20 billion per month, this could compress mortgage spreads. What that means is the difference between the 10-year and what the rate is, that's the mortgage spreads. Lower mortgage rates, increase housing demand, and boost home prices. So if this happens, you're going to wish you would have bought this month.
Because the competition is going to be
fierce.
Intense.
Fierce.
Yes.
GSE's retained portfolios have grown rapidly up to $68 billion in just the last 6 months. This move is remnants of the prior Fed efforts to bring the rates down significantly. So this works. This is what I've been talking about. And this is why I was saying that they should allow individuals to buy these and stuff to do the same thing. Right now, the Fed is only buying short term. What are you laughing about?
This asshole on the right-hand side.
Oh, what did he I don't even have that up.
Yeah.
Because I don't care about him.
A disruptor. He don't disrupt me.
Oh, you know what? He's a hater.
Oh, we're lesbians. We
Yeah.
scissor each other.
Gray beard homosexuals. Oh, that's great. That's
Yeah.
just really nice there, guy. All right, so guess what?
I'm a homo sapien. Come on, get it right.
Ban user and delete their comments. Great. Where'd he go?
Yeah, look.
We don't like haters. We don't need haters. You don't have to agree with us, but you don't have to be rude either.
No, we haven't said anything yet that you can't agree. It's just facts.
Right. Bottom line, if this materializes, it's going to have a mini refinance boom, stronger purchase demand, and home price appreciation.
Yeah.
I think this will go through because eventually he's going to have his own guy in the Fed, so this isn't what the Fed can do. This is just him to tell Fannie and Freddie, and his guy's in charge of that. So I'm sure it's going to get done. The December,
That'd be good.
Your December BLS jobs report, which you love, the Bureau's labor statistics.
Yeah, and lying statistics.
Well, the headline number came in at 50,000 jobs. That was below the expectation of 60,000, not a ton. But when they looked at the revision, October and November revised down by a combined 76,000, kind of remnants of the Biden administration.
Yeah.
October went from 105,000 to 173,000 to 105,000. November went from
your wife loves us.
Oh, she always does. November went from 64,000 to 56,000. So there you go.
Well,
don't cut into my stuff. I still got more.
But I wanted to say that's crazy.
Yeah. The jobs came from healthcare and social assistance, leisure and hospitality. So those are not government jobs. That is the huge difference right now. With the jobs that are being made are all private sector jobs, and there's not a lot of them. But one of the things we got to look at is the unemployment rate. It went from 4.5% to 4.4%, even with all this happening, with the less jobs being created and everything else.
Mm-hmm.
But the big factor is the U6 and unemployment. You know what that is?
No, I don't.
So the unemployment rate is, hello, are you working? No, I'm not working right now, but thanks for calling me.
Yeah, but I go in tomorrow.
The U6 says, hey, are you working? I gave it up. I'm not going to look for it anymore. It's people who have not in the actual participation going and looking for jobs anymore after they were laid off. That's what the U6, that's the overall. That's at 8.4% down from 8.7%. So that part, even though they only look at the unemployment rate, the household survey, the true number is the U6 number is what we should be looking at. Are you following me there?
Yeah.
So that's the people who are finally, it's like continuing claims, and we have existing claims that we did yesterday, and we have continuing claims, and then after a while, 26 weeks, you're kicked off. I think that's what the number is. That would be those people who are no longer really looking because why do I need to? I can't find a job, and my wife doesn't like me working anyway. I'm just kidding. Taking care of the kids. I'm downstairs playing video games instead.
Yeah, that's a good husband.
Yeah. The other thing,
honey, I got to level 6.
Yeah, that's right. The other thing that came out today was housing starts and permits for October. Housing starts are down 4.6% to 1.25 million annual rate. That's 7.8% year over year. So what is the annual rate that we talk about? The annual rate is what we need to build in regular housing and multifamily, and that is normally at like 1.9 million a year.
Yeah.
So did you hear what I said? Housing starts are only at 1.2 million.
Yeah. Well, we haven't hit that number in a long time.
And we're short what they said 5 million homes nationwide. Yeah. So we keep adding to that each year. Correct. Permits are down 0.2, not a TP, at 1.412 million. So that's still 500,000 down versus what we need. Mm-hmm. That's just to continue. That's not to catch up. That is just to continue not to go in the negative. That's down year over year 1.1%. Completions are up to 1.39 million. Woo-hoo. And that's down 15.3% year over year. So, takeaway from all these things, builders are pulling back. New supply is not keeping up. If mortgage rates fall because of what Fannie and Freddie, they're having them do, demand will rise, but supply won't be there to match it.
Right.
It's going to take forever because it takes them forever to build.
In
a day.
And that's what we're yelling about. We've been yelling about for most of the last year. When this changes and everybody jumps in the market, woohoo.
You know what that's going to happen is the existing home sales will finally go back up to the 85% that they were at before versus the 35%. Because as we talked the other day, we have the same amount of people with 3% mortgages and less as we do 6% and above. So there's no reason not to. And a lot of people have been hitting me up about refinancing because they keep hearing that rates are below 5. Well, really look at that information down at the bottom that says this is going to cost 2 to 3 points to get there, and you got to have 40% equity and all this other stuff. Yeah,
so and a FICO score of blah blah blah.
Well, just it's liar rates, and those could have been flyers from last year in September, and September was better than right now. How can that be? Well, that's just how it was.
Yeah. They're hoping that you'll be so excited to be able to finally refi your place that you'll take whatever they're going to give you.
Well,
they
don't.
End.
Yeah, but they don't know what the value of your house is. They don't know any of that stuff. They don't know any of that kind of information. They just send out flyers. This is what we can do, and then when you call them, oh, that was the market moved. I know this because I used to be one of those. We used to run one of those huge plants in San Diego.
Yeah.
All right. So retirement and reverse mortgage insights. So the new research from Boston College, I guess they're up on this. 83% of retirees face unexpected expensive yearly. And it's not just depends. Average annual cost of these surprise expenses about $6,000. Home repairs, $3,300. Healthcare, $4,100. Big concern. Only 58% of retirees have enough cash to cover 1 year of unexpected costs. That is sad.
Wow.
That means they only have $6,000. And I have some people who call me, and a bunch of them call me about reverse mortgages right now because they finally went through all their money and they don't have much left. And people are telling them to sell their house and go rent. And if you run the numbers, they run out of money in 12 years. And then we have a gardener who are blowing up outside.
Yeah, they're almost done.
Yeah. Well, it's
the yard looks great though.
Thanks.
Which some?
Was there anything? That's all I have for today. I mean, I had a lot, but long story short, if you're in this situation as a retirement person, you need to get a reverse mortgage. Even if you just do it to get rid of your payment and leave the equity there, do that. I don't care. You need to get it so you're protected and you don't have to worry about, get your dignity.
You
back.
Retain your dignity.
Yeah. All right. So next week is, oh, geez, man. Look at
what
that.
Is next
Monday,
week?
we have 10-year treasury auction.
Yeah.
That doesn't reserve that. Tuesday, ADP jobs report, CPI inflation data, new home sales, 30-year auction. Wednesday is mortgage applications, PPI, retail sales, existing home sales. Thursday is initial jobless claims, and Friday is industrial production and capacity utilization. CPI is on Tuesday. Wow. So I did say
you got PPI and CPI all in the same week?
Next week is a lot of more jobs, more inflation reports. What does that mean? Rates could get really better or worse. I think the big push is going to be,
I think you're accurate.
Yeah, I think so too. I think the big issue is going to be this whole MBS stuff and buying the mortgage-backed securities. And they've done that before. Some people are going to say that is a bad thing. I looked at what Barry Habib said. He's fine with it. That is just the best way to do it right now. We can't just, we're up 30 basis points right now on rates right now. So there's so much, I should say rates are better by 30 basis points
awesome.
Right now. That's this whole thing. I don't think it's worked its way out. And because the job report is actually a good job report. It's showing less employment, but more productivity.
Mm-hmm.
Those are productivity we love.
Huge. Yep.
Is you a liberal?
No,
God, they don't know me.
I can spell things.
Oh, no. Hey, only love for you both. Thanks, Marcia.
We already started that.
I didn't know. I didn't read it. I was too worried about getting my stuff across. You just said, oh, she loves me. I thought maybe she
does.
Loved it.
She does.
Some people are haters, and that's okay. You only get hate from below.
Yeah, and you only get hate from people who hide behind a screen.
Well, no, it's from below. That means they're not above you. They're below you.
I know. My God.
You got that?
Yeah.
All right. So Monday we'll be back. Well, we'll be back here tomorrow for the radio show.
Yep.
On 12 at noon, and then replay Sunday at 3 p.m. I'll be busy watching all the football to see who's going to be playing the Broncos because they don't play us until the following weekend. And this is wild card weekend.
You got to buy this week. We got to play. Of course, we lost miserably to the Seattle Seahawks, which pisses me off.
Yeah, but they were pretty good. Sorry.
Seahawks were.
Yeah.
They did look good.
Because they keep giving the bad quarterbacks away to everybody else. The Raiders got them, and that really worked.
Oh,
we got one, and that didn't work.
What the Raiders finished their season 3-13?
They finished it first round pick. That's all that matters.
Des will be so happy.
Yeah.
She was saying middle of the season, can we just quit already and give us our first round pick?
Well, that's the thing is when teams have it at the end and then they try to win. It's like, why even just show up and forfeit?
Yeah.
Keep your round pick.
Never mind. No injuries today.
Yeah. All right.
It's hard to be a Raiders fan these days.
Yeah, but right now, if I heard somebody else saying it's something about, the best time of doing this was 20 years ago today. What we say about buying homes. Yeah. When's the best time to buy a home?
10 years ago or today.
And it still really is. This is really a good time to buy just because you can get some closing costs. They're paying here's what I'm worried about.
Less competition.
Here's what I'm worried about going forward is when things get busier. Now sellers are going to say, I'm not paying your buyer.
Yeah, because I got another guy on the other side.
Because I got 3 other people who said they're going to cover it.
Right.
So you're going to have more costs if you wait because of that. So I would do it now because just like you showed, there's 58 days for a house to get off the market, where eventually it'll probably be 20 days. Again.
Well, and look, we started the year with 36 days. That's because 24 was a little bit, or 25 was a little bit better for a lot of people in the beginning, but it slowed down.
And it's going to get better.
Yep.
You're going to see. I mean, they keep taking over these whole containers of oil, the ships of oil, and our price of oil is going to get down to $50 a barrel. That there are some states that have gas at $1.99 and below.
Yeah, they do. In Colorado, I think I paid $2.25 for premium. But folks, remember, these gas prices will not come down in California.
No, because it's our refinery and our special blend.
Chevron's saying bye-bye.
Well, the other one,
Valero.
Thank you. I almost said something else. Vallejo. Yeah.
Yeah. Vallejo actually packed up their city and left too.
Yeah. I think, and that's a problem. California, we got so much fraud. We got all this other stuff going on. We need it looked at. We need it fixed. Because if we can get rid of the fraud, it could save a lot of people.
Yep. Yeah. Absolutely. And we need to start saving some money and not spending so much.
And get to a point where don't ask me what I am. Get back to where it was respected that you have different opinions and you don't ask people whether you're Republican or Democrat or liberal. It's none of your business who or what I vote. And I want to get back to that. We need to get back to that. It used to be respected that you didn't ask those questions.
Yeah.
Anyway, I'm done.
Internet screwed that up. All right. Have a great weekend, guys. We'll be on the radio Saturday.
We're still working, and I'm working this weekend.
Yep.
All
Me
right.
too.
Make it a great day, and we'll talk to you tomorrow.
Peace out.
Bye.